So let's start with tariffs, inflation, and the economy. And I think the highest level comment is as of right now, I've been in my 30 plus years of adult lifetime, I don't know that I've ever seen the economy with more uncertainty and flux. And so, as President Trump has implemented new policies at a dizzying pace, the lack of certainty of what's going to happen next is really impacting how businesses are making decisions. And so let's start with tariffs. And as many of you saw, President Trump a couple of weeks ago announced a whole array of tariffs, which would increase prices to consumers dramatically. However, he did keep the tariffs on China in place, and those tariffs are at basically 145%. Whether this is a good policy or not, there's lots of debates. I mean, there's lots of reasons to think that China is doing a lot of nefarious things and that we should be putting a lot of restrictions around China. The question and the challenge for most businesses is there hasn't been a lot of warning and there hasn't been a lot of certainty around the tariffs. So it's making business owners and small business owners and large business owners quite hesitant about what they're doing. The bottom line is for us as an industry, it doesn't do a lot because we're local service businesses. But for a lot of our customers at veterinary clinics who are in businesses that are international or importing products, it's just creating a lot of economic uncertainty. Now, I've put this slide up for many webinars, and it's what's happening with inflation and monetary policy, or inflation and interest rates. So there's an expectation that April and May that inflation will start ticking back up. And because there's fear that inflation is going to start ticking back up, the Federal Reserve is not about to start lowering interest rates because they're concerned that inflation's coming back and you kind of got to leave rates high if inflation is high. The labor market is also clearly softening. I'd say that most economists think that a recession is around the corner and that this idea of a soft landing, which seemed to be likely, is less and less likely today. What defines a recession? A recession is 2 straight quarters of negative growth in the economy, and GDP is the measure of growth. And to be honest, GDP has been pretty strong through the end of last year, through the end of Q4. Economists expect it to be negative 2.2%. That would not be a recession by the technical definition because it'll only be 1 quarter of negative GDP growth. But the expectation is that negative growth continues for a bit as we have all this economic uncertainty. What I like to say about President Trump is that he's doing to the economy and to the federal government exactly what he had promised during his campaign. One is by eliminating a lot of the federal bureaucracy, he's effectively deregulating the economy. There's benefits to a lot of these policies. The execution, I would say, is abrupt, but a lot of things that are happening, and it's impacting what I would say is certainty and consistency in the economy. The amount of activity that the administration has put in place in the first 90 days is unprecedented. My underlying view is that there's a lot of change that's going on, but the long-term strategy is going to be to focus on China. The question will he build alliances with other countries to help with that economic battle with China? Time will tell. Anyway, the question then becomes, how does all this stuff impact each of you who are running veterinary clinics? If the economy does go into a recession, it will impact spending at veterinary clinics. So we as an industry are not immune to the macroeconomic picture. Our industry has been having lingering problems post-COVID. Before COVID, our industry was one of the more predictable and consistent industries out there. Then came COVID and growth skyrocketed, and we had unbelievable years in 2021, and that led to a lot of stress. It led to a lot of price increases, It led to people leaving jobs, a lot of turnover. And when you have such steady and such strong growth, there's usually an aftershock where things slow down. And the problem for the industry has been for 12 straight quarters, and IDEX will announce their earnings in the next couple of days, and it'll likely show that there'll be a 13th straight quarter where the industry has had invoice growth of negative approximately 2%. If the economy, especially this year, slows down, the likelihood that we have invoice growth is going to, in my mind, is pretty low. But what's remarkable about our industry is despite the lack of growth, valuations for individual veterinary practices have gone up. And that's telling us that the larger deals are still at a premium and getting really strong valuations. At the high end, we're seeing 13, 14, 15 times EBITDA for the best practices. But the weighted average is up. That's telling us that the higher value practices are continuing to be strong. So at the end of the day, the market's getting it's a little more complicated. It's not just a straight line up, but we are seeing still strong multiples well above pre-COVID levels and well above sort of 2023 levels. We're not back to 21, 22 levels, but pricing is still strong. And so why is pricing still strong? It's that there's a supply and demand imbalance. And the number of hospitals sold hit a trough in 2024. Many groups are still looking to expand despite the economic times, and they want to show growth. We are seeing volume picking up in 2025. And as Wynn said at the beginning of the webinar, at Ackerman Group, we're selling the largest number of hospitals in the industry. So we have the most real-time data on what's going on. And it's been a great first 4 months of the year so far. There was a shortage, or there was a lack of supply in 24 that helped took valuations up. We also saw the first large recapitalization or sale of a large consolidator to a new investor happen in December of 24. SVP and MVP merged. It was 17 to 18 times EBITDA for those two businesses. So it's established sort of a new reality for what valuation looks like for these larger consolidators. And it was the first major recap in 2.5 years. But with all the economic uncertainty and potential recession, everyone seems to be putting their brakes on things and slowing down. So there's a lot of uncertainty on the recap side because of the economic uncertainty that's out there. We hope that the recaps and the supply-demand imbalance will keep veterinary practices at reasonable valuations. Why do I say the market's at an inflection point? I say that because we've had this period of invoice decline. The industry isn't a guarantee of growth that it was before COVID. We've had 3+ years of this invoice decline. We had tremendous growth during COVID. Now there's a cyclical downturn, and we'll see the growth again in the future. At some point, investors will say there's been decline for so many straight years. Maybe there really is a fundamental change. Hopefully that doesn't happen, but that's the risk. And it's why we've been saying to sellers that if you're thinking of selling in the next 2 years, you should do it now before the potential market downturn. Let me now talk a little bit about what we're seeing with how deals are specifically being structured and trends in those structures. So lower interest rates means people can put more cash in. But every buyer at these prices is still looking to de-risk deals. And so there is structure in every deal. And structure is just a fancy word for we're not paying all cash. And so there is more structure in deals. We're seeing for the last 3 years how important doctor recruitment is. And a few things to know about this is, one, if you're producing a lot of revenue or a high percentage of revenue at your practice, a buyer is going to typically ask you to stay 3 years. And if you're in a hard to recruit geography, that could be 4 or 5 years. Retention incentives are now the norm for doctors. I've said already that the strongest demand is for the best practices. We define that as 4 or more doctors and over $500,000 of EBITDA. So let me go to some specific data on deal structures. Basically, 65% of our deals are seeing 70% or more cash up front. And for those of you who are selling, cash is certain. You close a deal, cash goes in your pocket. A lot of our sellers who are thinking about retirement want more cash up front. So it's a good trend to see the cash there. And then this is a really important slide, and it also speaks to why having a good broker is important. And so already in the first 4 months of 25, we've sold to 3 new buyers who had never bought from us before. And in 24, we also sold to 3 new buyers. And we've been in business a long time. We work with a lot of different groups. And so we track this to show the community and the industry that new formation of buyers is happening all the time. All right, that's a lot of info. So let me summarize a few things. If you're looking to sell your practice, the buyers have an enormous amount of expertise. They've got business development executives who you're going to always like because they're salespeople. But supporting them, they've got financial analysts, experienced legal counsel. They've got a senior management team that usually has decades of transaction experience. And you've got private equity firms that are backing them, that they do this stuff for a living. And you, as an individual seller, you haven't really sold many businesses typically, and you've got maybe a lawyer helping you figure this out. Our advice is, if you're going to sell, get a broker. Help rebalance the scale so that you have someone who's really experienced at working on these transactions and understands all the nuances and details, because purchase price is one of 30 important deal terms, and making sure that they're all understood and figured out critical. So summary, the economy, as I've said over and over, is in a state of flux. Interest rates have stabilized. The Fed is reluctant to lower them right now due to the uncertainty. Recession seems a likely scenario as economic growth is slowing, and consumer confidence is down because of the uncertainty. In our industry, we're trying to figure out if invoices will revert back to pre-COVID norms or not. Despite all this, valuations are still really good. Buyers are being a little bit more conservative with their cash in 2025 than 24, but they're spending way more cash than 22 and 23.